Hey all, welcome to today's story. Happy you could all make it today. It's Tuesday and we're going to look at a whole bunch of online, on-chain, sorry, I haven't had enough coffee today. On-chain TA, I said online, online on-chain TA. That could be the new Octa, OLOCTA, Olocta. I don't know what even that says. Anyway, let's just jump in and talk about Flat-Tober. There's some strange things going on, and flat sometimes may appear to be bad, but in this case it's actually not. So let's, as usual, fly through this story. Make sure you all take something away. So disclaimer, edutainment, you guys know the drill. And well, you forget that, let's talk about the good news first. And the interesting thing going on is we're seeing cracks appear all over the world all at the same time. And Bitcoin and crypto are actually holding up relatively well, which is good news. But they're holding up so well that something is going to pop soon. And we're going to dig into some of the data behind that to indicate what happens after flatness. And that's the whole story. And despite all the stuff in the traditional markets going bad, we'll talk about some of the bond markets, a bit of macro, what's happening at the Fed, UK, big day on Thursday with the CPI print. But believe it or not, there's actually more good news than bad news. So let's go. So first of all, this one is from Rect Capital. And there are many current perspectives, but now people are beginning to believe that June $17,600 bottom for Bitcoin was the bottom. That was the so-called macro price floor, because Bitcoin's been holding up really, really well, despite things getting worse on the macro side. And in fact, we've seen countries like the United Kingdom pummel money into Bitcoin when the currency got hit. And I expect that to be happening today as well. I don't have the updated data on the actual volume into Bitcoin from the British pound, but I guarantee you there's definitely some. We had $1 billion 2 weeks ago, last time we did this. Now, according to 3 macro triangles, you can see that Bitcoin is now in the final bottoming out phase in an effort to form a generational bear market bottom. So if you look at the triangles lines that Rect Capital put on this picture, you can see the little circular part. That's where we kind of bottomed out, and since then forming that bottom, getting ready for the next move up through that descending line. So we'll see if this is holding. I did say that 17.6 was most probably, nothing is definitive in this world, but most probably the bottom back in June. And so far, other people begin to say the same thing. So we shall see where this goes. Now let's talk about the flatness, and hence the title of this video, Flat-Tober. You can see here, this is extremely unusual for Bitcoin in 1 month to be in the super tight trading range. And I love to scalp Bitcoin, and it's been really tedious and really frustrating because, you know, you could pull $1,000 out every couple of hours a few weeks back, and the last month has just been dead flat. And this is kind of like an opposite world because other assets are extremely volatile and bouncing all over the place. But again, 8% range in 28 days is unheard of. Let's see if that applies to other assets later too. But first, we'll talk about Plan B. Plan B also noticed that as well, that we are now 5 months at 20K, which we have never been so flat for so long. And then hence the topic, flatness. And you can see the black line here as this 200-week moving average, the gray, the realized price. They are both converging. And of course, Bitcoin flat under the realized price, which again, as I always say, this time is different, and we're getting more proof points all the time. Thank you, St. Jude out there. So let's look at Ethereum, see what Ethereum is up to since the merge. And again, 9%, not 8% for Bitcoin, a little tiny bit more volatile, but 9% over 23 days. Again, boom, 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 super tight channel. It's as if the crypto market is asleep, waiting for a catalyst. And we'll talk more about that too. So a little deeper dive into Ethereum. You can see here more triangles for those who like triangles. The Ethereum symmetric triangle here. This gives us an idea of where we were. As you can see, we've fallen out of the bottom of that. And the question is, where do we stand now? That original 1300 was supposed to be a strong support. Right now, the way I interpret this, we've got about 1380, 1381 is the roof level for Ethereum. In that range, it is compressed a bit. It fell out of a triangle, so sometimes triangles break. And the floor is at about 1220. Now, there could be increased selling pressure if we crash through that 1220 level, but it's unlikely to send Ethereum back to 800. And many people are talking about, oh, Ethereum is going back to 200 and 300 and everything else. I don't even see 800 happening, but we'll see. If we do break through that 1220, the next layer of support is about 1005. So we'll see where this goes. But again, weird times. Crypto is extremely quiet. Now, probably the most pleasing chart I found all day after rifling through hundreds and hundreds of them, and I'm going to share the best with you all every 60 seconds, KPM. Here, this is the best news. This is something I've been waiting for, something that actually bothered me for a long time. I always spoke about it, the key cohort. That is, those whales that own between 1,000 Bitcoin and 10,000 Bitcoin have started accumulating. Yes, the last couple of weeks, they've been buying, and you can see they've been dumping ever since April. And now they're back in the game. And remember, this cohort controls the majority of Bitcoin out there. And I was worried about this little group, all bear market. So it's hard to see. But if you look at the top right corner of that chart, you'll see the blue boxes. Now, there are different cohorts. The box above that is the 10,000 whales plus. They actually are now neutral. They're not accumulating. Once the 10,000K plus guys, once that box flips blue, boom, we're off to the races. You can see they've gone from red, the 10,000 plus, to neutral, which is like black. They're not buying or selling. The next stage is for that to flip blue. Once that happens, I think we are off to the races, ladies and gentlemen. Even in the bottom cohorts, the people with less than 1 Bitcoin, 1 to 10 Bitcoin, the 1 to 10 actually have been selling a little bit. The less than 1 are flat. The 10 to 100, again, flat. The 100 to 1,000, flat. And the smart guys, the guys who and gals who know this market are really the ones that are going to drive it to the next step. So this is, again, for me, a very exciting sign. Not slinging hopium, sharing data. So for this cohort, again, 1,000 to 10,000 Bitcoin jumping back into the game is positive. Let's look at fear and greed. Now, in the topic of flatlining, we are still flatlining in extreme fear. It's like every week we come back and the charts don't change. We're still hovering here around 24. And extreme fear is right at that cusp. The good news is we could be coming out of the extreme fear level and back up to 25. I estimate, based on how things are working, barring any unforeseen cruddy macro situation, that could change. And again, I have to stress, crypto has been holding up extremely well, considering what has happened. If the bottom was in June, it means, again, per my thesis, Bitcoin is kind of like the canary in the mine, the early warning sign of things to happen, and the rest of the markets follow Bitcoin, which is extremely positive. Let's look at, again, another topic of flatline. Here we are, altcoin season, also flat. This has had no change in 2 weeks. And again, everything is sitting back, waiting for something to happen. But watch this 1,000 to 10,000 whales as they buy. Now, this is super interesting. So I just want to talk for a second about the Bitcoin perps. You can see here, it is a parabolic chart. And the growing open interest, which is OI there in the graphic, shows no signs of stopping. Now, I did touch on this. I'll put a little clip out on it too, because people are concerned about Willy Woo and how he believes the futures markets could suppress price of Bitcoin indefinitely. I am not of that opinion, but when you look at this chart, it kind of supports his thesis. This total OI, which is open interest, is nearing nearly 500,000 Bitcoin, and it is in a parabolic growth trend amid Bitcoin's flattening, which is unusual. Now, we've highlighted the growing open interest in the market since June, and the trend has only escalated since. And the open interest has more than doubled in notional terms since middle of April. And this level of leverage is unprecedented in this space. And in perpetual swaps history, this open interest has not happened in isolation. It's also happening with Ethereum too. But eventually, this will result in a violent squeeze. So depending on how these bets are actually placed, typically this level of leverage will result in an explosion, most probably to the upside. And that's what I think the 1K to 10K whales are seeing. Maybe they're playing both sides of the fence too, both in the spot market and in the perp market as well. So we will watch that very carefully. But this is actually a good thing. In other news that supports that kind of thesis, big thank you to Sanjay for sharing this with me. This is from Delphi Digital, and they talk about the BBWP, which is the Bollinger Band Width Percentile indicator for Bitcoin. And it's at about 15. And historically, when it goes lower than that, towards about 5, we see a major market swing point. But this is on a 3-day chart. I did replicate this chart, and I didn't see any history that gave me a lot of conviction. But again, maybe they do on the 3. I didn't see it when I configured my BBWP. And on a 3-day, a 5-day, a 1-day, a 1-week chart, I just couldn't see it. But we'll watch it. They believe it could be something that would support the previous open interest, that something is going to pop soon. I still think we need the Fed to take the lid off the can before that actually happens. And tomorrow, or Thursday, is a big reading on the CPI as well. Now, another bonds versus Bitcoin news. People are learning all about their bonds these days. And this is per the Financial Times. This is the longest maturity UK government bond. And it's crashed worse than Bitcoin over the last year. At the time of this, I think it's called a linker in the UK, and it's maturing in 2073. Imagine buying a bond that goes out 51 years or 52 years. Now, aside from a handful of perpetuals, the longest maturity bond on the market has lost 78.6% of its value since it was issued on the 23rd of November. By the way, it's down 80% since its peak in December 1st. And guess what also happened on the 23rd of November, 2021? That was the top of the Bitcoin market too. So interesting to look at, but Bitcoin's performing a lot better than this bond. So a lot of the old FUD that used to be thrown at Bitcoin that, oh, Bitcoin's too volatile, can't touch it. There you go. Another proof point. And in fact, the other day I said that Bitcoin was actually less volatile than the Dow Jones, which is one of the most stable indexes. So the last piece of good news for today, and then we start going to the bad news. The oldest bank in the United States, called BNY Mellon, they want to hold your crypto. And this was founded by Alexander Hamilton way back when, 18 something. I don't remember. I did know this morning, but I completely forgot. And I don't want to say the wrong date because the internet is unforgiving. But the cool quote here that actually came up, I think, from Michael Saylor. And he said, for traditional banks to hold their value, they have to hold what you value, or words to that effect. And they want what their clients want, and that is Bitcoin. So that's a piece of good news. Now, let's switch to the bad news, everybody. There is some bad news. First of all, the amount of Bitcoin supply and profit is just above 50%. And currently, 50% of the circulating supply is in an unrealized profit. That means half is in a loss. And one of the key things to point out here, a little bit of on-chain data that is not as positive as the stuff before, is the fact that history, for a true bottom to come in, typically I think the percentage of unrealized profit needs to fall to about 40 to 42%. Now, we don't know if history is going to repeat, but we'll see. But if that's the case, the amount of those in profit means the price has to go down. And that'll probably take us to about somewhere between $16,500 and $17,500, I estimate. But maybe this time is different. The same thing I've been saying for a long time. A lot of things are very subtly different that we're seeing. But anyway, a lot of people do believe, like the folks at Glassnode, great work, their chart, by the way, they believe we need to go lower for a true historic bottom to come in. Others don't believe that too. Now let's look at money flow. This is the first negative week in a month where the actual money flow into digital assets was down, but it was only down by 5 million. So it's really a nothing burger, but still it's down after 3 weeks of having about 10 million a week coming in. Now it's the first in a month where it's actually down. Let's look at the breakdown between different assets, which gives us a little bit of enlightening news. First of all, Bitcoin saw its fourth consecutive week of inflow, about 12 million. Again, not a lot for Bitcoin, but the really good news here is look at the short Bitcoin, minus 14.7 million. So people have stopped shorting Bitcoin. Well, 15% of them approximately. And that is a positive sign. Again, negative that the whole money flow into industry is a little bit negative, but there's a few bright spots, and that is the short Bitcoin is very negative and Bitcoin's positive. So maybe things are flipping around. Solana was down 200,000, Litecoin up 100K, XRP down 100K, and other miscellaneous items were, I think Cardano was flat and others were down a little bit. I can't remember which ones. I think Polkadot had a little bit of a loss, and a few others as we go forward. But overall, very flat. Nothing big happening except for the drainage out of the short fund. Now, let's talk about the dollar index. You can see here, this is the wrecking ball we've been talking about. A strong dollar hurts the rest of the world. We hit that 114 plus level, and it looks like we're shooting right back up. It was about 113 and change. And ever since we broke above that 110, it kind of bounced off it on the way back down and shot up again. Again, everything around us is crumbling. All the other global economies are hurting. The world is in recession. It just doesn't know it yet. And that's a problem. So we have to watch this. The question is, will we break that 114? 114, 115 for me is pretty critical. I think people are beginning to see value in other currencies. And maybe I do also believe that the dollar is very overvalued at this level. So let's talk about what's causing this. So this is the fastest ever sequence of Fed hikes in the history of the world. And you cannot have the Fed tighten and crush liquidity conditions at this pace. As I'm saying, it's going to cause financial Armageddon. So we'll see what they do next. Are they going to go a full 75 and then hike something after that? If so, there's going to be a lot of breakage. No doubt about that. So have some cash out there, everybody, in case they do smash everything to smithereens. And it's exactly the same mistake that a lot of people said when the Fed ran quantitative easing during the C19 crash. They went too far issuing money, and now they're too far tightening the situation out there. So this is historical, and that's why this time is different. Everything is different. Debt loads are different. Pace of hikes are different. The frailty of the world is different. It's craziness. Let's talk about tightening here for a second. Here, this is from Bloomberg. Financial conditions tight enough yet? And you can see they are the tightest in 10 years, barring the C19 situation, of course, where everything just stopped. So that's just an anomaly. You can ignore that completely. But in more than a decade, it has not been this tight. And the Fed is hoping that it can rein in inflation via the means of a tighter financial conditions. So let's just club the economy over the back of the head with a big baseball bat and hope everything gets better. So each little burst of optimism makes it harder for the central bank to move. And Bloomberg's own measure shows that US financial conditions are now more than one standard deviation tighter than the mean for the last 10 years plus. And their tightest in that time, except for that anomaly, is where we are right now. So this is a hard situation. Anybody looking to borrow money, whether you are a business or individual, you can't without paying a very high price. And that smashes economies. Now let's talk a little bit about the ugly news. And this is more ugly today. So first of all, JP Morgan came out and said the central bank is triggering a crisis. Stuff I've been saying as well. I'm glad to see the big banks are saying that too. JP Morgan, a strong dollar may trigger a crisis. When the central bank steps on the brakes, something goes through the windshield. The cost of financing has gone up and it will create tension in the system. I think they're being a little bit polite here. I think it's not something goes through the windshield or something stepping on the brake. Think of a car slamming on the brakes at 120 miles an hour, burning the tires, and many things going through the window. Cups, you name it, golf clubs, maybe other things. I don't want anyone to get hurt, of course, but this is the most front-loaded cycle ever. There are top experts that I follow, people like Mohammed El-Arian, Jeremy Siegel, and they are all losing their mind, saying, this is a self-inflicted wound. This is too much. So now the big banks are crying out too. Starts with kind of the academics and the top economists. Now the big banks are saying, ho, hold on here. And, all it takes is a phone call from BlackRock to say, Larry Fink on the phone saying, hey, JP, slow it down. So we'll see. Now, this is one thing which is kind of unusual to me, and I don't know why anybody's talking about that. And sorry about talking about all this macro stuff, but it's so important because our whole monetary system drives what Bitcoin does in many ways. Now, this is an article from Reuters. The Fed bond losses halt payments to U.S. Treasury. Well, why does nobody care about that? Well, a sharp spike in U.S. Treasury yields has raised concerns about the impact of unrealized losses in the Federal Reserve's massive bond portfolio. It is huge. And according to Morgan Stanley's chief economist, I think it was Seth Carpenter, he said it's not necessarily a concern for the Fed and it won't impact its liquidity, but it will stop receiving remittances, which means the Treasury needs money from somewhere. And what does that mean? What do you do when you need money? Drop a comment below, or I'll spoil it for you right now. You print it. So this is what Morgan Stanley believe. They're going to have to flick the money printer back on because of these losses. But I don't know why nobody's talking about this. I think this is probably the biggest story of the day, or maybe the second biggest after the 1K to 10K whale starting to buy Bitcoin again. Accumulate, which is good. In other bad news, obviously, Bank of England is back again. Bank of England further expands bond market rescue to restore UK's financial stability. And speaking of bond buying, which is also debt issuance, which is also money printing, whatever you want to call it, the Bank of England has approximately a British pound 60 billion hole that they need to fix now. Oh, by the way, that's Liz Truss running down the street at 10 Downing Street. A horde of reporters today, all trying to get her to say something. She's like holding a briefcase and running as fast as she could in high heels. She's quite fast, actually. Quite impressed with her speed. So I hope everybody in the UK is okay. But this was kind of interesting. This is a third intervention, I think, in about 2 weeks. And nobody right now wants to lend to the UK. Everybody is on high alert. And there's a lot of pain being felt on the ground in the UK. Those with mortgages that are flipping, getting more and more expensive. Those who have businesses that need to borrow. It is a hard time. And that $60 billion hole, I think they just gave a $50 billion tax cut, which they reversed, and printing money and all sorts of other stuff. But that's just a temporary hole that needs to be tapped soon. And what they've done, which is kind of crazy, is they've alerted to all the speculators that they're going to stop this bond buying program at the end of the month. So you never ever tell a speculator when you're going to stop, because they're going to run longer than you. So that's a total signal. It's like, come take us down, everybody. Boom. So it's going to be an ugly situation over the next 3 weeks for the Bank of England. Hope they survive it, but I think they just invited more speculators today. I could be wrong. We'll see. In other bad news out of Europe, it looks like poor Europe. Everything is being so hard hit over there. Germany leapfrogs UK to become Europe's most shorted stock market as recession fears surge. And guess who jumped into a huge short position over there, shorting German stocks? And that is none other than Bridgewater, which is Ray Dalio. They own, I can't, 25-30% of all the short positions. Position is, I think their position is worth about 10 billion. Total shorts about $30 billion to take down kind of hope that German stocks fall fast. And that is a scary time. So that's the news for today. Some good for crypto, but other kind of traditional market stuff is kind of hairy as heck. So with that, everybody, hope everyone's doing good. Thank you all for being here. Thank you to the mods in the chat. And see you all tomorrow. Bye.